big, beautiful bill signed by Trump on July 4th can be a game changer for CEOs, and you need to know about it. A new tax law has been enacted, and if you're not paying attention, you will miss the opportunity to significantly improve your cash position and reduce your tax burden. So listen up. This new legislation is the ultimate game changer. It is a policy shift that directly impacts how much capital your business retains, reinvests, and report. And so, if you are a high earning CEO, today's episode outline what you must understand to protect your profits and legally reduce your tax liabilities to the smallest amount possible and make confident financial and tax decisions in response to these new tax law changes. Welcome back to the Say Yes to Profits podcast, the show for 7 and 8 figure service-based minority women CEOs who are ready to master their finances, multiply their cash flow, minimize their taxes, and confidently say yes to profits. I am your host, Dr. Octavia Conner, your future virtual CFO, tax strategist, and the founder of all things Say Yes to Profits. My firm helps 7 and 8 figure entrepreneurs add an additional $100,000 to their cash flow and profits while saving about 55% on average in taxes using our signature Say Yes to Profits framework. You all are in for a treat today. The big, beautiful bill just passed. You all know that I've written an entire book on how to say yes to zero taxes. And I'm going to do an upcoming masterclass on this same topic. This big, beautiful bill will legally and potentially help you say yes to zero taxes as a 7 and 8 figure CEO. I'm going to link the copy of this book and the link to the masterclass in the show notes. Okay. Here's what you need to start with understanding. I'm just giving you tax information. You need to make sure that you seek your tax accountant, your CPA, your CFO to help you implement these strategies in your business. This is not tax advice. All right. First thing first, understanding the big, beautiful bill. So, as I said before, on July 4th, the one big, beautiful bill was signed into law. Now, it introduces tax modifications intended to stimulate economic growth and lower tax obligations for business owners. Now, these tax obligations or strategies are not automatic. You have to implement them through strategic tax and financial leadership. I'm going to go over the top 4 that will help 7 and 8 figure CEOs use it to legally and ethically say yes to zero taxes. And so the first provision that I want to talk about is the ability to deduct 23% of qualified income for pass-through entities. If you operate a pass-through entity such as an LLC, S Corp, or partnership, your deductions on qualified business income has increased from 20% to 23%. So as an accountant, let me give you an example. So a business reporting $500,000 in qualified income may now deduct up to $115,000. Okay. This significantly reduces your taxable income and increases your post tax cash flow position. All right. And so a strategy here, you all, is to examine how to use this to your advantage. What is your compensation plan? What is your tax strategy surrounded by how you spend and earn money in your business? Like, these are some of the things I'm going to talk about in my upcoming masterclass, how to say yes to zero taxes, because you can now use this to deduct up to 23% of qualified business income. That can significantly reduce your tax liabilities. All right. Okay. So moving on to provision number 2. So provision number 2 is about the reinstatement of the 100% bonus depreciation through 2029. So bonus depreciation has been a critical tax saving tool for businesses since the Tax Cuts and Jobs Act of 2017, which initially allowed 100% of immediate write offs on qualified business assets. However, this provision was designed to phase out over time. So, beginning in 2023, the percentage began to decrease annually. So, it dropped to 80% in 2023. 60% in 2024, and then it's set to 40% in 2025, and then it was going to eliminate altogether in 2027. Well, the one big beautiful bill now reverses that downward spiral to 100% through 2029, and it's set to phase out starting in 2030. Whew, a lot of numbers there. Okay, so here's how you use this strategy. First of all, this change creates a powerful, time sensitive opportunity for 7 and 8 figure CEOs to accelerate deductions and improve cash flow position over the next 4 years. Now, this provision allows your business to immediately expense the full cost of eligible capital assets, including machinery, vehicle, technology, software, and office improvements. So instead of depreciating these things over 5, 7, or 15 years, you gain the ability to deduct the entire amount in the year in which the asset was placed in service. This new provision is valuable for companies undergoing expansion, if they have infrastructure upgrades, or if large scale technology is being invested in. Oh, this could immediately help you. And so you want to review your long term capital improvement plan right now. Do not wait until the year end to make big purchase decisions, okay? Align upcoming assets acquisition with financial projections and the tax calendar planning, all right? If your asset is not in use by December 31st, you will miss this deduction. This is a temporary window, all right? You want to use it to restructure how you spend your capital, how you preserve liquidation, and how you legally and ethically say yes to zero taxes. Moving on to provision number 3. Okay, so provision number 3, you all, is a new deduction for overtime and tip income. So listen closely. Businesses employing tipped or hourly workers may now deduct up to $25,000 in reported tip income and receive a tax credit for overtime wages paid. Oh, this one is really good. Okay, so I want to be crystal clear here. You can receive a tax credit for overtime wages paid up to an additional $25,000. Now, this is particularly relevant for service-based businesses such as hospitality, beauty and wellness, healthcare, restaurants, things like that. Okay. And so you want to review your payroll system. You want to make sure that you're reviewing and you're capturing tip income, you're capturing the overtime wages, because now you can use those as a significant tax deduction. So do you have the right payroll systems in place? Is everybody clocking their overtime? Is everybody clocking their tip income? These are things that you want to look at and you want to improve so that you can use this to your benefit. All right. Okay. So moving right along to provision number 4. Okay, so provision number 4 is about Section 179 and how expensing limits have increased. So, in addition to the return of full bonus depreciation, Section 179 expensing limits has increased, and this change for business owners will allow you to control the cost of qualifying business assets. So, what do I mean? So, Section 179 allows businesses to immediately expense the full purchase price of eligible assets, such as office furniture, computers, certain softwares, and certain equipments. So, unlike bonus depreciation, which applies automatically and requires all eligible assets to be deducted, Section 179 provides flexibility to choose which asset to expense in the current tax year and which to depreciate over time. Okay, it allows business owners to align deductions with their broader tax deduction or tax reduction plan. Okay, now this provision is especially useful for service-based businesses that make routine but necessary purchases throughout the year that may not qualify on a larger scale capital treatment. All right. Now, what must you do? Review your upcoming purchases to determine which asset fall under Section 179 guideline. Then use this provision to lower your taxable income without compromising your ability to plan for the future. Here's what you need to understand. When properly applied, Section 179 can serve as a powerful tool in managing tax exposure while maintaining operational efficiency. When you combine Section 179 and bonus depreciation, this is where you legally and ethically get into saying yes to zero taxes. But you have to plan, all right? You have to align your capital expenditure plan with the tax codes, rules, and regulations. That's why you need to join me for my upcoming masterclass, How to Say Yes to Zero Taxes, because we're going to implement not only the big, beautiful bill, but additional tax strategies that you can use as a 7 or 8 figure entrepreneur. Okay, so we have arrived to the profit check yourself moment. This is the part of the episode where you pause, reflect, and keep it 100% real with yourself. So first and foremost, it is time for a serious evaluation of your current approach to taxes. Are you engaged in proactive tax planning, or are you reviewing your numbers at the end of the year and you're like, well, I hope I pay less in taxes? As a 7 or 8 figure entrepreneur, hope is not a business strategy. It's cute, but it's not a business strategy. If you want to legally and ethically beat the IRS at their own game, use what they're giving you. The big, beautiful bill and all of the tax rules and regulations since forever. Honestly, are you using these things to your advantage? I don't want you to hope for a refund. I want you to just pay the smallest legal amount possible in taxes. And you can do this by reviewing that, comparing it to your capital expenditure plan, comparing it to your tax strategy. But if you don't have a tax strategy and you're not proactively doing this, you're going to pay more in taxes than you should. The IRS actually states that 93% of business owners pay more in taxes each year. Are you in that 93%? Well, if you join me for my upcoming masterclass, Say Yes to Zero Taxes, and grab a copy of the Say Yes to Zero Taxes book, you can actually not be in that 93%. Okay, so let me stop fussing and let me leave you with this. The One Big Beautiful Bill is not just legislation, all right? It is a shift in how wealth will be taxed and retained at every business level. As a CEO, you benefit from this. You are not going to be reactive for things like this, or at least you shouldn't be. You should be proactive, okay? If you want to reduce your tax liability and strengthen your business's financial foundation, you need to be in the room at my upcoming masterclass, and you need to use what they're giving you, okay? I will share with you exactly what you must do, all right? And then you proactively plan, prepare, and you will prosper when it comes time to reducing your taxes, okay? So I hope you meet me at the Say Yes to Zero Taxes. I hope you use the Big Beautiful Bill to legally and ethically lower your taxes, because now is the time. Do not delay and do not wait. If you have any questions or comments, leave them below and I'll answer them, and I'll see you at the upcoming masterclass. This is Dr. Octavia Conner, and until next time, say yes to zero taxes and say yes to profits. Toodles! Thank you for tuning in to another episode of the Say Yes to Profits podcast. Now it is time for you to make money moves. Take action based on what you learn. Now, see you on the next episode. Say Yes to Profits. Toodles!